Hi, Matthews here. In this video, I'm going to talk about trade management and things that you're supposed to do in order for you to keep paying yourself as the market is making money available to you. All right, so let's get started right now. All right, so you can see that our first trade, we took our first trade from somewhere at this level right here. We're looking at this order block right here. The market dropped a bit, almost, it actually dropped about, it was like this. The first signal was actually here. It was something like this. The market dropped about 2 hours in our direction, and then I had to tell the community to actually go break even on this trade right here. People went break even on this particular trade, and the market retained right here to the entry, and we're taken out on the break even right here, which is okay. However, the market again gave us another opportunity to actually enter. So you can see that the other NZD signal which was sent was here. When the market retraced back to this level, this was another entry opportunity, right? So we can see that the market was just consolidating right here, consolidating. It was a nice rally based stop supply zone with equal highs right here. So the market came to this level right there, and then guess what? We saw another selling opportunity right there when the market actually came into this zone right here. So when this was happening, I was like, okay, this is another opportunity to actually sell. So we sold from here. We sold from here, right? And let's put this circle right here. So this was our entry right here, and then you see what happened. The market consolidated, and I knew that usually most of the times after such a consolidation, market would actually see the market actually dropping with big momentum candles, right? So what happened later was that the market actually dropped with big momentum candles right here. So the market dropped from here with big momentum candles to the downside right here. So this is what happened. This was around New York Open, and so the market really giving us a really big drop to the downside. So, and then you can see that right here, I had to tell the community again to do what? To go break even on what? On NZD JPY right there, which they did, and I'll be surprised if people actually got out with just a break even when the market literally dropped about 6 hours in profit. The market dropped about 6 hours in profit. Remember, our stop loss was like 5 pips, and our target, our target was like initially like 100 pips. However, in this particular trade, the market went into our direction around 6 hours, right? So you should just move your stop loss to break even and let the market come and take you out from there. So you are supposed to, I assume you know market structure, right? And then when the market is going in a direction like this, especially when you have big momentum candles like this, it's easy. What you have to do is keep moving your stop loss behind structure. You can see if you go on the 1 minute time frame, the market dropped really nice right here, really big drop right here. This one drop was about what, almost like 20 pips right here. This is a beautiful drop. There's no way you should let all this right here, all this go to waste. So right, when the market drops like this, you keep trading your stop loss to breaks to actually keep trading your stop loss behind structure. So when this first zone is broken, you move your stop loss to break even, and then when the market keeps on dropping, like you can see here, the market again broke structure to the downside. Okay, so in this case, I expect you to move your stop loss at least somewhere here. Okay, so on this particular trade, you don't come out to be a break-even trade. At least the least you should get from this particular trade is at least, let me see, how much is this? About 3.5 hour, right? Because that's where the market had left structure. So this was a lower low, lower high, and lower low, right? So initially you're supposed to move your stop loss at this on this higher low, so that when the market takes out this high right here, it means that the market is potentially not going to continue to go in the downside, right? The market is potentially going to go in an uptrend, and as if you can see, the market after taking out this high right here, the market continued to go to the upside, and the trend was changed. So that's simple market structure. Follow what the market is doing, right? Follow market what the market is doing, so that you keep on catching those moves, right? So when the market takes out this high right, it means that there's a high chance that the market is going to continue to go to the upside. Therefore, you're supposed to actually move your stop loss as well. So especially when you see big momentum candles like that, you actually trail your stop loss behind structure. This is how it is. So right here, when the market breaks this low, you move your stop loss behind structure. The market breaks this low here, you move your stop loss right here. Okay, and if the market had continued to go like that and you keep moving your stop loss, and once the market comes back to this level, you get out right here with a cool 1 to 3 risk to reward ratio. With others, that's a lot. That's a lot. And for us, the main target was actually low here, because initially we were actually planning on buying NZD card. We were looking for it to come to this level right here. Unfortunately, it didn't come to this level. Otherwise, this is where our target was. You can see that our target was almost like 25 hour right there, and the market had just gone almost like initially about 6 hour, which was just fine, and I managed to close about 1 to 3 risk to reward ratio on this particular trade. And that's what I expect from especially my students, because this is what we talk about every time. So make sure you are managing your trades so that you avoid letting winning trades turn into losing trades. That's extremely important. And we actually had a similar incident again in the afternoon on gold, right? You can see that we had a nice rally based drop supply zone. We have liquidity, and we saw the market taking out the liquidity coming into our zone. And what happened here was absolutely beautiful. The signal was sent to our private community right here. Let me just show you what happened later on gold right here. The market dropped really nicely to the downside. After our entry right here, the market dropped around 8R, right? The market dropped around 8R, okay? And and you can see right here that the market started to do what? To break structures. You can see that the market gave us that nice entry right there. Then you can see that after that, the market started to break structures to the downside. So this structure was broken, and when that happened, you know what you're supposed to do, right? You're supposed to move your stop loss to break even. Move your stop loss to break even and keep on trading the stop loss. So you can see that I had to update the community to go break even on gold right here after the first low was broken, and we did that. And later on, the market continued to do what? To break structure to the downside. And guess what? This dropped about 1 to 8R right here on this particular trade. And then it continued to actually do what? To actually drop and break structure. Structure was being broken to the downside. And then you are supposed to do what? To continue to move your stop loss behind structure. This was broken. You move your stop loss break to actually to break even, so that you pay yourself as the market is making money available to you. The market is literally making money available to you. Don't be greedy and trying to hold that maybe the market was just going to go all the way. So what you do here, what I expect from you guys is that you shouldn't let the market come all the way to actually take you out at break even right here. That's unreasonable, guys. That's unreasonable. What you're supposed to do right here, the most recent lower high is where? It's here. This is where I expect you to be taken out from, right here. This is what I expect you to be taken out from. Well, that's the latest higher lower high right there. So instead of you going out with a break even, since we didn't catch, since the market didn't come all the way to our take profit, and you can see that our take profit was way below here. It was about 200 pips, right here. We're targeting these lows right here. Instead of actually getting all that, the market at least went about 90 pips, 83 pips right here, and this was a 1 to 8. And then what I expect from you guys is about get at least 1 to 5, 1 to 4.5 risk reward ratio right here on this particular trade. If you didn't move your stop loss, still okay, because the market seems to be continuing to actually going to the downside right here. Otherwise, if you're taken out, I expect you to be taken out at this level right here. That's a 1 to 4.5 risk reward ratio, not on a break-even trade. That if that happened, that's unacceptable, and you need to learn how to manage your trades. And that's how it is. So this is how it was. These were really nice setups. They worked out and they went in our direction. Unfortunately, the market didn't just continue to go like that. There was a deep pullback to this level right here, and now we continue to see the market actually continue to drop right there. So yeah, this is what's going to happen, guys. You need to learn how to manage trades the right way. Pay yourself as the market is making available to you, because you don't know how far the market is going to actually continue to go, right? You have no idea where the market is going to actually go. So you have to find a way of paying yourself as the market is making money available to you. And there are different methods of doing this. Others trail stop losses, others scale out of positions when the market maybe goes 2 hour, they take off 4%, which I mean 50%, which I don't encourage. For me, I encourage you to actually show the stop loss behind structure so that you're able to actually get as much as possible. If you take partials and scale out, what's going to happen is that you are reducing the potential of you making a lot of money. If that trade continues to go with big momentum candles, you're going to regret, right? Because you'd have missed out on a big amount of profits right there. And this is how it is. And these are some of the trades we've taken today. Another trade we've taken today, which was a loss, was AUD NZD, a beautiful trade setup right here. Right, base drop supply zone nicely came to our level right here, responded. However, this didn't go in our direction, and this one was a loss. AUD JPY right here, you can see that as well. It actually dropped. It dropped right here, and then we saw the market and decided to go like that. So most of our setups are actually we're actually going in profit, and unfortunately they're not just going so much in profit to our target. So it calls for you to actually be good at trade management. It's really important. So make sure you learn the skill. I won't always be available to actually tell you guys, oh no, do this, do that, right? Because I'm not going to be spending every time on the charts, right? I have stuff to do as well. So it's good that you learn for yourself as well, so that you don't have to depend on anyone to actually tell you to do anything. And that's what I always encourage, and that's what I always promote, you actually learning how we trade so that you can do this on your own eventually. That should be a goal. That should be a goal for everyone who's actually trying to trade right now. Okay, I hope you found value in this video. If you have, make sure you subscribe, like the video, comment in the comment section. And if you like to trade the way we trade, there's a link down in the description. The first link actually takes you to our M&F mastery course, where we teach you exactly like we trade. We used to get lifetime mentorship and lifetime signals in our private communities. All right, you guys take care of yourself. Until next time, goodbye.